I'm Charlotte McLeod with investingnews.com, and here today with me is Josef Schachter. He is president and author at the Schachter Energy Report and a 40-year veteran of the industry on both the buy and sell side. Thank you so much for being here. Great to have you back as always.
Oh, Charlotte, it's a pleasure to be with you. Definitely not boring times in the energy sector. Lots going on, lots for us to talk about.
Yes, we have so much to get through today, and thank you very much for agreeing to come on. I know this was a little bit more short notice than some of our usual interviews, but it's a very volatile time in the oil market right now. We had prices rising this week past the $100 mark. Of course, right now we've gone back below that once again. But I wondered if you could start by talking us through this volatility we're seeing. Is this typical when we have conflict breakout as it has in Iran over the past couple of weeks?
Yeah, I think when we were talking last, we had a bullish view on the price of oil starting in Q2 when we thought, OPEC's production would show that they can't increase. And then in Q3, we thought global inventories would come down. So that was our bullish thesis, but we were looking for prices to maybe average for the year $70 WTI, if you remember in our discussion, with maybe $80 in Q4, if we were right about the tightening of supply and demand. Well, all of a sudden the war starts. And so right now, the key thing is how long does it last? And what is the reason that they want the war? Is it to destroy their ballistic missiles, which right now can reach Europe, but they were building those that could go all the way to hit the United States? They had Russian and North Korean help to do that. Second, of course, was they had the drone manufacturing that they were using in previous wars with Israel, and they were providing them to the Russians to use against Ukraine. There's a reason to stop that. And then last was the nuclear issue. They and their discussions with the presidential advisor Wyckoff, who is involved in negotiating with Iran. They said that they had enough fissionable materials. I think it was 460 kilograms of material at the 60% level, and it would only take 10 days or so to take that to 90% and have a nuclear weapons, 11 weapons. So that was another issue. So now, and they also at 60% could do dirty bombs, suitcase bombs, and so that was an issue. So right now the president is saying our target in the war is to destroy their missiles, to destroy their missile and drone manufacturing capability, and to destroy their Navy. So let's start with the last one. They've destroyed 50 plus ships. And this is coming from the chairman of the Joint Chiefs, General Kane, who said they've destroyed their Navy. So there's no way they can block the Straits of Hormuz, which was the big concern of mining or blocking the straits. They cannot do that. So if the U.S. goes to convoying the shipping out of the area, it'll take some time to do that. They've got to get the destroyers and, frigates in the area. They need Britain to help. They need France to help. And interestingly, China might even help because China wants the oil and the product. So if you have a big enough Navy, that could stop it. And so that was the one side. On the other side, the leadership, they wanted a regime that was not, supporting terrorism. And of course, the new fellow who's in charge, Khomeini's son, his wife was killed. His parents were killed. One of his children was killed. So he's not going to be friendly, and he's even going to probably be tougher and more hawkish and more adversarial than his father was. So I think that the regime issues are still out there. And while the Americans are saying that they're attacking and they've destroyed over 5,000 targets already, there still are these ballistic launchers. So originally when this started, they had 450 of them, and then they had over 2,000 ballistic missiles, according to the U.S. government. Then with the attacks that they've had between the Israelis and the United States with good intelligence, in the first week they knocked off 150. So you're down to 300. This week they knocked, and over the last few days they talked about knocking off, another 100, 150. But there still are missiles out there, And if you look at the news at night, you hear about attacks that have not only gone into Israel, but there was another, attack that went towards Turkey, which was shot down by NATO. And all of the Arab countries in the area are still getting drone attacks. There was even a drone attack against a refinery, a drone attack against a desalinization plant. So until the Americans have taken away all of the ability of Iran to attack its neighbors, I don't think the war is over. And then the pressure will still be on. Look, I think this new fella Khamenei, the son, has a bullseye on his back. And, I think if the Americans get a chance or the Israelis get a chance, he's part of the IRGC. He's supported by the IRGC. He got elected because of the IRGC. These hardliners want to control it. It's like, they're drug lords. They control the economy. They control the money of the flow of oil. They've used it to increase their military. And so until they're degraded sufficiently, and this is where the optimism I have comes in. There's two militaries in the country. There's the IRGC, which is what everybody knows, and they're the ones oppressing their people. And there's a group called the Atesh. This is the old conventional military of the government, in power. And they really have not been heard from. And so if the Americans have worked diplomatically to get to the leaders of the Atesh and said, when we have degraded the IRGC sufficiently, then you can come out and finish them, and it'll be the Iranian people, you supporting the Iranian people, that make the regime change. Because the other choice is government in the United States sending in troops. Nobody wants that. And regime change, when it's forced, doesn't work. It has to be from the people. So I'm watching the Atesh. I'm watching any news flow coming from there. And if something like that did happen in the next week or two, you could look at an end to the war by the end of March. On the other hand, this thing could drag out for weeks, even though President Trump wants it to end, because he's got political issues with the midterm elections. And of course, the high cost of energy, the gas price has gone up. We've had in the write-up we just did to our clients, we said that we thought the price of oil would get up to 100 if it dragged through the end of March. But we said if it takes into April or May, we could grow above the 2008 high of $147 a barrel for WTI, and we could reach 150. So it's a question, the price of oil matters how long the war lasts and how long it takes for traffic from the Straits of Hormuz, where ships can go from the Persian Gulf, load up in Saudi Arabia, load up in, Qatar if it's going to be natural gas, LNG, natural gas. And until we know those things, even though the Trump administration yesterday was trying to quiet everybody's down and, it's not going to be a long war. We're not going to send troops in. But the nuclear, as I mentioned, the comment from, I watched on CNBC today, the 460 kilograms at 60%, the Americans need to get that. The UN, the UN has to be the receiver of it, or the United States or someone, to get that out of the country, because it's not needed at that level for nuclear power in power plants. So this is weapons grade or near weapons grade. So to me, there's still time here. Is it 2 to 3 weeks or is it 2 to 3 months? That will tell you where the price of oil is going to go.
Really helpful to unpack how you're looking at this situation. Clearly, there's so much uncertainty, and we'll talk a little bit more about your price scenarios. But before we go there, I do want to touch a little bit more on, you're mentioning the commentary from Trump over the last day or so, saying that this is pretty much over. Can you talk a little bit about why he's saying that? Is this just an attempt to calm the market, even though it looks like it will continue going on for at least some time further?
Yeah, because you're getting different messages from Pete Hegseth, the Secretary of War, and you're getting, even from people in the White House, different messaging from what President Trump is doing. And also President Trump gives different messaging from day to day, depending upon what news flow is going and what he needs to say to calm the nerves out there and calm pricing. So, we were at $119. And at the high, intraday Sunday night. And now we're looking at the price around $84. So it's really come back a lot. And should it stay in that 75? It just went down again, 80.34. It's down to 1441 right now, just on CNBC in front of me on the TV. So it just keeps on coming down as the calming effect is affecting the markets right now. The big thing for me is if you look at the map of Iran, it's a very big country. And on the western side of the country is where all the attacks are occurring. And that's like half the country. And even, right now there's still bombs, or missiles being sent from those areas in Iran to the Gulf countries, also towards Israel. Just turn on CNN and you're seeing that every night. But the eastern part of the country is not being attacked at all. And drone manufacturing facilities can be made anywhere. So while they're attacking the drone facilities on the west side, they're not doing anything on the east side. Who knows how many ballistic missile sites are in the east side? So until the Americans can really cover the whole country and ensure that there is no weaponry there that can be used, because the Americans, if they say we won, and then they withdraw the 2 aircraft carriers, all of a sudden, if Iran decides, okay, now that they're out of the area, and it'll take time for them to come back, we may now say, okay, let's upgrade the last little bit we need on the material, and then all of a sudden threaten everybody by saying, don't ever attack us again because we have nuclear weapons, just like North Korea. Everybody, they have nuclear weapons. Are they going to be attacked by South Korea or Japan, or, are the Americans going to attack them? I think that nobody expects that would ever happen. So again, the minute you say you're a nuclear power, the game changes. And so I think Iran is looking at the fact that if they can delay this, get the Americans to leave the area at some point, finish up getting this nuclear material, then I think that's going to be a threat that's going to be a problem, and a bigger problem than it is today.
So you had mentioned you see 2 different price scenarios depending on how long this ends up lasting. So I wonder if you can share any more details on how you see those playing out. Are you leaning more toward one direction than another at this point, or really just too soon to tell?
I think it's too soon to tell. The Americans have done with Israel a good job of knocking out the weaponry in the western part of Iran. The problem is nothing's happened on the east. So if they decide they need to do that, that drags the war down another month or 2 down the road. I would watch, the nightly news. Is there more attacks by Iran on their Arab neighbors? Are they attacking energy facilities? Are they attacking desalination plants? Because most of the water that comes into those countries comes from desalinated water. They don't have water sources of their own. The biggest amount of desalination plants are in the Middle East, and some countries get 70 or 80% of their water from desalination. And so if those plants are attacked by Iran, that's not good. So I would be watching the news every night. Is it going to be 1 or 2 weeks like President Trump is kind of hinting at, and that's why the price of oil has retreated, or is this going to drag on? And if it's in April and there's still attacks going on their neighbors, then I think the higher price area that I've talked about, is a risk. So it's too early to tell. I don't think anyone knows. I don't think the Iranians know. I don't think the President Trump knows. I think it's just an issue of watch from day to day. And I think that if things calm down, then that's going to be the 120, might be the high, and we're 119. So, that's that. If on the other hand, it drags out and we're talking about this a month from now or 2 months from now, and we're still watching the news every night and seeing attacks, then I think it's going to be the higher case. So, what we may want from the point of view of casualties and the problems in the Middle East and the poor people that are caught up in this, be it the Iranian population, which would prefer a different leadership, or is it the citizens of the UAE or Bahrain or even Saudi Arabia and Israel? That's going to be a problem, and there's deaths right across the area. And the shocking thing to me was Iran firing missiles at Turkey and Cyprus. Do you really want to bring the NATO countries into this? And Turkey's got a pretty strong military, and they're right on your border. So there's too many dynamics happening. And one bad mistake by one of these people, either against a refinery, against a port, against a tanker, desalinization plants, you hit too many of those, all of a sudden this escalates.
Yeah, there's just so much going on right now, a lot of uncertainty. So thank you for sharing your thoughts there. I wonder what you make of these group of 7 conversations about potentially releasing oil reserves. It sounds like the US is not very interested in that, but these conversations are happening. So do you think that's something that would actually end up happening?
Well, the countries that are most caught up with lack of inventory in terms of commercial stocks are Europe and Asia. And so right now, China has said that they don't want their refineries shipping diesel or jet fuel out of the country. You have other countries in Asia doing the same thing. Japan is looking at putting on price caps, to make sure, and they'll use their reserves. Many of these countries, like Japan, have no their own sources of energy, so they've got to import everything. In the case of China, they might consume 17, 18 million barrels a day, but they produce only 4. So, 4.2, 4.3. So a lot of that is imported. So the first thing that's going on is the United States, to cool the worries in Asia, is they've said to India, we will remove Russian sanctions for 30 days and you can buy their oil. Now, the Russian oil, prior to the end of February, if the price of oil for Brent was 65, they were selling their oil at $40 to $42 US a barrel. Now, with the sanctions being removed for India, and there's no oil coming from Iran, there's no oil coming from Venezuela. So 2 of the 3 countries that had sanctions on them that were selling to India and to China are no longer able to do that. So the price of oil, even though we're looking at, $80 today, is it 85 or 80? Every minute I'm looking there. The price that Russia's getting is US $70. They're $10 less than the last price. So if we're 85, they're getting 75. If it's 100, they're getting 90. So you compare that to the 40 that they were getting just in the last few days of February, and it's a dynamic change to their cash flows. And that's why the United States President Trump had a conversation with President Putin yesterday, because they would love to start pushing them, being Russia, to de-escalate in Ukraine and possibly move them to a peace deal. And with pressure from Europe because of all the problems they're having, and Ukraine now, it realizes that, that they're in a positive side from the point of view that they can provide drones to help the Arab countries against the Iranian attacks. But on the other side, you've got Europe that's facing a financial pressure from higher energy prices, be it oil and natural gas, that they're saying, look, you want more checks to run your country and you want more money from us. We're putting pressure on you to move to a peace deal, even though it may not be what you want. It's what probably you can get.
That's a very interesting nuance to the situation as well. I want to talk with you also about what's happening to the oil stocks during this price volatility that we're seeing. I looked at some of the big names, and it seems like there's some fluctuations when oil was going past 100, but not massive swings. So what were you seeing among the oil companies, and is that typical when we have this type of big moves in the market in the price?
Yeah, you got to break it out between the oil and gas, and between gas that's domestic and gas that's international. So let's start with oil. Many of the oil stocks from the lows in April of last year, when we were, we talked about, a buy signal then, and we were saying, it's a table pounding buying opportunity. The stocks did well, and some of them have doubled or tripled from those lows. So unbelievable performance there. Natural gas stocks, some of them have moved if they had a liquids portion. Some of them that only are dry gas or don't have a lot of liquids have not done anything. So the ones that have really done well on the oil stocks, we've been telling our clients, if you had a 4 or 5% weighting in your portfolio, and now it's 10 or 12% because the stock has more than doubled, Do you really want to have a overweighting? It's not like you're owning Royal Bank or, well, remember in the old days, Nortel, do you really want to have an overweighted position like that? And so we're saying maybe pare it down, harvest some of the gains, get your cost out, bring it down to a 4 to 5% position. And if we are right about the bullish scenario into the end of the decade, you'll make money on that again. But again, from a portfolio prudence point of view, bring it down to a proper position. If you are a long-term investor, then you may decide, look, I don't mind disproportionate positions, so you may stay with it. Look at NVIDIA. People who had big NVIDIA positions, did they pare them down or not? Or did they say because they love the name, or Apple, pick what you want in the tech sector? I think the paring down makes sense. I've done that myself, and in the SER report that's coming out on Thursday, they'll see that I've done that for our holdings, where I've said some of the oily names have had such a big run that paring them down more than a double from the April low. So again, the prudence issue in my case, and so I think that is something for people to consider. Natural gas stocks, many of them have not moved, not at all. And so there's bargains there. And one of the stocks, we have every issue, we look at the whole area of 32 companies we cover, and we say, are there any stocks that are in bargain territory? In the months of January and February, there was an oil name, Strathcona, which we thought was a bargain at the time, $26, $27, and it's 36 today, 36.31. So you're getting a nice dividend, plus we thought there was good capital gain potential, and that's worked. In the issue that's coming out, we have a natural gas stock, so I won't say it because I want the clients to see it first. But we have a natural gas stock that pays a small dividend, but the reality is they're very levered to higher natural gas prices, and they're now drilling again for liquids-rich wells, which they weren't doing because of the tough times that the industry went through. So we like the sector, natural gas. It's still our favorite area. We like light oil, and natural gas liquids, and we think that the pipeline issue for Canada is becoming more and more important. I think, you've heard people coming out more and more saying either, we need to go west with another, natural gas line. We need to have more LNG, the 6 BCF a day if all the plants get approved, FID'd and built. And now we're hearing about potentially a pipeline going south, South Bow. Is South Bow going to be rejuvenating the old XL part of the line and bring it down to the Gulf Coast or the Midwest? So I think people are now realizing, we've talked about this before, but let me bring it in context because I think it's very important for people to know. The biggest producer of oil in the world is the United States, 24 million barrels. They consume under 22 million. So they are a net exporter. They bring our oil down, but they export their light crudes from the Permian Basin that they can't use in their refineries at the Gulf Coast. Then you go to Saudi Arabia at 10.5. Then you go to Russia at 9.3. Then you go to Canada at 6.1. And then you go to China at 4.2. So if countries around the world do not want to be dealing with Russia, and if they do not want to be dealing with Saudi Arabia because of human rights issues and other things that they're concerned about, or the Straits of Hormuz issues, potential disruption, then Canada sits in a very enviable position behind the United States. And so countries around the world are going to be calling, Prime Minister Carney and say, look, find a way to get oil to us. Find a way to get us natural gas. Find us a way to get us potash. Find us a way to get us sulfur. Get us forest products. All the things that Canada has that's in our wealth, in terms of our exports. Interesting. The biggest export is energy. So oil and natural gas is our biggest export, surplus. The second is gold. Precious metals are a big factor now at $5,000 an ounce. Silver at wherever we are, 100, wherever 90, who knows? That moves like crazy. So I think that people should be looking at the natural resource sector, be it uranium, be it copper, be it anything that that we do, that we produce, and that we are a low cost producer of. If we can find the markets, and if the government of Canada now realizes the only way to pay for our social services, the only way to handle our debt, the only way to provide for the growth of of the population, be immigration or natural growth, is we need to have a bigger pie. We need more money coming in to both the federal government, provincial governments, and the people working in the industry, the companies, and investors need to have an adequate return. That means we will sit here with maybe a 5 or 10 year period of enormous growth in our resource sector all across the board. So while I'm here sitting about energy, somebody could be here talking about uranium or talking about forest products or talking about, the rare earths. The big thing is all of those are all positives for the economy longer term. But again, it requires everybody at the table agreeing from the federal government, provincial governments to First Nations. And if we can get everybody at the table, I think Canada has a fabulous opportunity in the next decade.
I think it's really good to highlight the opportunity in Canada. Are you seeing those groups starting to come together a little bit more cohesively than they might have in the past?
Well, the federal government is saying some of the right things, but the key thing is the approval process and how quickly it takes. In the United States, they're talking about approving new LNG facilities in 6 months, and between the state and federal doing that. They're now approving more land to be opened, for drilling on the Gulf Coast in Alaska, the North Slope of Alaska. We aren't doing those kinds of things. On the West Coast, no drilling occurring. East Coast, we haven't seen any in years. There's an issue of pipelines through Quebec. So there's so many things still to be resolved. And the East route, to me, is a low probability for either oil or gas or they keep on talking about that they would be able to send hydrogen. Well, I don't buy that either. So the key is going to be going west. And so does the west mean BC or does the west mean through Alaska? The other wild card, and I think you and I've talked about it, is Churchill or the Great Lakes. So there's going to be some decisions having to be made between all the players. I think First Nations are seeing the benefits economically and ownership wise. I think they want to own. Nobody wants to own TMX with the debt that it has. So the government of Canada is going to have to write off a massive amount of debt. And then they can say, okay, to the private sector and to the First Nations, here's what we've done with the write downs. Here's what the value is. Here's the economic return to you. And if it's in the teens and the First Nations see it as something they would like to hold longer term, then they would be number one, buying in it. And then they would also be part of the expansion of the TMX, which is one of the options here. So there's lots of good things that can happen intellectually in terms of the commentary and, support from the industry. But until everybody at the table says yes, and they have a timeline that's reasonable, the problem is everything takes longer and everything costs more. Just think of Coastal GasLine. Talk about the TMX expansion. The budgets were blown way higher than they were expected to be. And if there's no reasonable number and that they can meet that budget in terms of the cost and do it within the time frame, that becomes the issue for investors. If you tell me it's going to be a $2 billion project and I'm going to get a 15% return on my equity, and all of a sudden it's a $5 billion project and there's $3 billion more of debt and there's no return on my equity, because all of it's gone to interest payments, you're not going to say, oops, I'm not going to be an investor.
I think it makes total sense how you're explaining it. I want to go back just a little bit briefly to the oil stocks. So I think we have a good idea of how you're treating oil and natural gas stocks right now as we're going through this volatile situation. But I think this whole oil price spike might have attracted new interest to the sector, or maybe people who are invested, but they want to now have more exposure because they see that these things can happen. So what would be good entry points in the future that you'd be looking for? I know we just talked about how there's so much uncertainty, but how would you look at that?
Well, to chase things now after some of the big runs we've had, I don't recommend doing that. I think there's going to be a pullback. The pullback will be the war is over. and then we might see $75. Just taking into account what happened in 2022. The price of crude was 85.81 in February. I've got the prices in front of me. They went to 126.42 in the second week of March. By the middle of March, 2 weeks later, it was down to $90. So the prices can move around quite a bit. And then by the end of the year, they were down below 80. So to me, we need to have the war issue resolved. And then I think we'll see a pullback, and that might be a great opportunity because of the fact that the straits have been shut for so long. There's going to be a big pull down on the inventories globally, and that was what we were talking before about. Our bullish view, in February, was we're going to see Q2 OPEC not being able to grow their production, and in Q3 global inventories coming down. Now we're going to see global inventories coming down in Q1. And so that is the thing that's brought everything forward in terms of the price moves. Now, the industry does not need $120, sustained. That's too high. If we see, and the cost, at the pump would be too high, and the cost of inflation, you're hearing more and more about stagflation because stagnant growth and rising inflation, and $120 oil does that. So alone, and the PPI and the CPI and the PCE, all those numbers would go up. So I think if we can get into a nice place like $70 to $80, if you remember, I was using $70 for my average in February. I'm thinking now of moving that to 80, because I think we'll be in a $70, $80 environment post-war. Is that in April? Is it May or whenever? And I think it'll be in that kind of range, and that will be enough to attract foreign investment into North America. Canada will be one that gets it. We've talked before about takeovers, and we saw, Coedno taken out by private equity. We saw Ovintiv come in and buy big asset pool from Paramount, and then they bought out NuVista. We had Step on the service sector taken over. I think consolidation will continue because our basins are younger and less developed. So in other words, our reserve life index in the Montney and Duvernay is much longer than the Permian and the Eagle Ford. So the Americans would even come back into Canada. Well, Ovintiv is coming back again. Our old Pan-Canadian in Canada moved to the States, and now they will have more production in Canada than they will in the States. And we're seeing other companies like Baytex sell their U.S. assets and come back to grow their Canadian assets. So I think foreigners will come back. There's an interesting history. When things are good and the sector is, and there's a shortage of oil and there's concerns about risk premium, foreign investors come into Canada and they buy up and they overpay. And, that's usually a good a sign that we're maybe near the top of the cycle. And so I think that that's something that we're going to see again, where the foreigners come back. If you go back in the last few years, all the assets that have been sold, the big assets were foreign assets that were bought by C&Q and bought by others. And I think we're going to see that reverses, and we see more foreigners come in. Just taking into account past cycles. Mike Rose's Berkeley got taken out, I believe, by Anadarko, big U.S. firm, and then his Duvernay company was taken out by Shell. So the foreigners will come back. And, you look at the Canadian companies with long life reserves, be it Birchcliff, be it Advantage, be it, Peyto. There's so many names that we cover 32 names. We cover 3 different groups. We cover conservative growth and entrepreneurial. In the growth area, in the conservative area, we're trying to get total returns of about 20%. So if you can get 4 to 6% dividend yield, and if you can buy the stocks at the right time, i.e. the next correction when they're cheaper, you could get 15-20% capital gain and a 20% total return. That's for the conservative. In the growth, you're looking for companies that have 5 to 8% growth in production, and as well as having some dividend or an NCIB. And that's where there's a nice group of companies. And then the last are the entrepreneurial ones, those that have an exploration focus. And if they are successful with the drill bit, then you can see significant upside. And you take that 99 to 08, period when we had the last major energy super cycle, there were 10 baggers and 20 baggers. That's where they come from on the entrepreneurial side. So for people who have a portfolio, like in my case, I have most of my assets, or over half of them in conservative, because I want the dividend income and I'm comfortable there. But I do have growth and I have entrepreneurial, because I do want to have the ability where a company really does a good job with the drill bit, that we have the ability to get those outsized returns like we were able to get in that 99 to 08 cycle.
So opportunities across the spectrum in terms of company size, and we've got entry points coming up in the future if people want to look at that.
Yeah, I think that there will be a correction. Will it be because the war is over and early, or will it be, because it's later? But at some point there will be a pullback in the price of oil. Right now, we're saying if you're over invested and you have a position that's outsized, maybe take some profits on it. Traders may want to be a little more aggressive. But the key thing is you want to have exposure to this sector, because multiples today are, let's say, 3 times depressed cash flow. Cash flow is going up though, but going on our prior estimates in February, trading at 2 and 3 times cash flow. At the top of the cycle, they traded 8 to 10 times much higher cash flow because the price has gone up, and then the volumes went up because they increased their production. The other one is NAV. Some of them, used to trade, in February at PDP, proved developed producing assets. Some are now trading at 1P. But historically, at the top, they trade at 2P, which is proven plus probable. And so we could see multiple expansions in them, because the price of oil goes up, their volumes go up, the NAV value goes up. And so all of that creates over time many baggers on the upside. So we've had a hell of a run here. We've had a fabulous run. I don't think you should be chasing. For investors, when we get this correction, then they should be building their positions. And there's different areas to buy. You want to buy natural gas producers that are going to benefit from LNG. You want to buy companies that are light oil that will benefit because condensate is needed for the heavy oil movement. You want to be buying the heavy oil related names that are in the Clearwater or up in the oil sands, SAGD. And then you want to buy the service sector, because as the price of oil goes up, the industry is going to spend more money on drilling and fracking and pipelining and all the rest of it. And so you want to have exposure to there. So what I recommend people is, if you're conservative, you can find names that fit all four baskets there. If you're growth or entrepreneurial, you can find names in each basket. And so, for example, we own Trican. We want the company that's the major fracker in Canada. We own that. So I think people should find the names that they like. From a point of view of what we do in our research, we cover 32 names right now. I've got a fellow working with me, Nathan Ritchie, who joined us on the research side February 1st. So we brought him on board, which is wonderful. And so people can go to our website, and there's research from from historic research there that they can get an idea of what we do. And then we do really two things. We have a weekly thing called Ion Energy, which is the macro review, which is what, the major things we've talked about. And a lot of people really don't spend time on the macro review, and I think that's added value that we do. Then we cover the 32 companies in our SCR reports. And so that's the value that we bring to the table, and it's been a success. We started this in 2017, and it's grown beautifully, and we have 5 people on the team providing the product to the clients, and I'm a happy camper.
Well, we will have all of your links in the video description for people to check them out. And we're coming to the end here, but before I let you go, it feels like every time we're talking, there is some kind of crisis situation going on. I think last time it was Venezuela, now it's Iran. And I wonder, as we move from crisis to crisis, are there other elements in the oil market that people might be overlooking that you think you would want to highlight right now for investors?
Well, the politics is going to affect the price. Any problem that there is with Russia, or any price, if there's Taiwan, China goes after Taiwan, that's going to be an issue that's going to spike prices up because it's another issue of war, and the American military may be getting involved. But the other side of it is the supply. The areas where you can get secure supplies are important. So Right now, if you want to invest in European natural gas, you've got the Netherlands and Germany as big producing areas, the Norwegian North Sea. So Vermilion is a company that people could look at for that. There's also companies, if you want South America, there's Colombia, there's Brazil, so there's that. We have a company, Valeura, that's operating offshore at Thailand that's growing its production by the drill bit. And so, they're doing well. There's a company called Marin, which is offshore Africa right now in Nigeria, in Namibia, with upside there from the successful drilling that will get approved and will bring those productions on. So I think you want to look around the world to the places where you can find more oil, where they can bring it on at a reasonable price, and then you want security of supply. All of those bullish things I just said are in Canada. So I'll finish with saying, we have a cheap Canadian dollar. We're not, to travel overseas is expensive at 136. But if the price of oil stays in the 75, 85, we could have parity to the US dollar again. And, people don't remember, just pull out the Canadian dollar charts from, 2000, 2010, when there was a positive energy cycle and the Canadian dollar was traded over the United States currency. So I think people should be looking at Canada. Why pay, 136 to buy an American secure energy stock when our stocks could go up just on the currency over time. Plus, of course, the opportunity if the companies do well. So I'm bottom line, I'm bullish on Canada, and I think the Canadian energy sector is one you should be invested in, be it the big boys of Suncor or CNQ. If that's where you want to be, great. If you want to go, lower down to the companies like the Tourmalines and the Paramounts and names like that and Birchcliffs, those are the size companies that we focus on, and then smaller than that. So we're filling the gap in that medium and smaller cap space, providing information to clients to make their decision of what fits their portfolio. They should sit down with their investment advisor, decide what's appropriate for them, and then make the decisions and be ready to build their portfolio when we send out the next buy signal, which hopefully will be in April.
Okay, well, perfect place to wrap up, especially for me as a Canadian. So thank you so much for coming on to talk about what's going on in the oil and gas markets. This is really helpful, and hope to do it again soon.
I hope so too. Take good care. Thank you very much.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Josef Schachter.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.